Now, Andrew, this is, I'm sort of putting you on a little bit on the spot here, but if you look at that graph, it's got number of days payment overdue by industry. And Nick was saying earlier that some of them that you would expect to have blown out haven't blown out, hospitality, for example. But on the other hand, construction definitely seems to have slowed down. Wholesale trade seems to have slowed down. Mining, no surprises there. Mining's business as usual. Anything in those stats there that sort of jump out at you, Andrew?
Yeah, I found that really surprising, but then I guess just sort of briefly turning my mind to it, I think that this may well be a really useful reflection of what it is that's happening in terms of this behavioural shift. So if we think about the industries that have blown out, they're the ones that have been least impacted by trading restrictions and probably been busiest through this time. So if they're utilising essentially trade credit as a means of being able to manage their growth or their increased demand, then that may well be a good reflection of what business attitude is like from a trade credit perspective. And those businesses that you would otherwise have expected to have blown out days may well have been accessing stimulus. In my experience, directors of corporate debtors are generally pretty keen to pay their trade credit because that's mostly their supply chain. So it may well be that by virtue of having, I guess, less demand, they want to keep their suppliers happy because of the fact that when it dials back on, they're going to need their support.
Okay. Anything? Okay. Well, that's some interesting points of view there. Nick, anything that you'd sort of add to that on that chart?
I think it points to where the pressures are being felt. It's not so much because of the pandemic; it's more because of other factors, and I guess it's pandemic induced. And a lot of the concern is with our members where they're worried about their customers' viability and their customers' viability going through, and the supply chain risk is the big one. And you look in construction, and maybe that's a lot of the payment time pressures there, that if they can't get the widgets in to finish the construction, and the progress payments are slowed up, and that slows up the whole chain. So the supply chain and other sort of systematic risks are probably where the insolvencies and credit risk is going to come from.
Yeah, one thing that I'm really interested in is when the supply chain does come back, because there are obviously issues with supply chain. Everything's clogged up, ports around the world for various reasons. But there's one theory that when that comes back online, that the demand may have dropped away. But